Now we turn our attention to the rising bets in favor of spot crypto funds globally. An exchange-traded fund investing in Bitcoin made its debut on Australia's primary stock market this week, joining a slew of comparable launches in the US and Hong Kong this year. Take a look at their next report to understand this new trend, which has taken Wall Street by storm since going live in January. Bets in favor of spot crypto funds have risen exponentially across the globe. First, let's understand what is an ETF, or an exchange-traded fund. ETFs are exactly as the name implies, funds that trade on exchanges, generally tracking a specific index. When you invest in an ETF, you get a bundle of assets you can buy and sell during market hours. This potentially lowers your risk and exposure while helping to diversify your portfolio. Stock indices and gold ETFs are the best examples. The listing of spot US Bitcoin ETFs by large global asset management firms indicate an adoption of the crypto token as mainstream asset. The likes of BlackRock, Fidelity, and Invesco have launched their own spot Bitcoin ETFs. Since making their debut in January, Bitcoin funds have ranked in about $56 billion in assets to date. What is more interesting is the global interest now. The crypto funds are making waves beyond US shores. Hong Kong permitted spot ETFs for Bitcoin and Ether in April, but they have garnered only a fraction of the interest of the US vehicles. South Korea is also lining up to permit crypto funds to list. The latest is Australia, where the VANIC Bitcoin ETF went live on Thursday on the exchange operated by ASX. The fund listed with a seed investment of 985,000 Australian dollars or 657,000 US dollars. The product is a feeder fund for the $647 million VANIC Bitcoin Trust in the US. Separately, Sydney-based BetaShares Holdings and DigiTalks, another local player, are also lining up for the listings on the main stock exchange. Bitcoin has roughly quadrupled since the start of 2023 in a comeback from a deep bear market. The rally reached a record high of $73,798 in March, but the token has slipped back and the momentum has stalled since. Still, the interest by large institutional investors in virtual assets ETFs is pointing to a broader adoption of the largest crypto token. Investors will eye Bitcoin's price action this year to understand the token's stability as a mainstream asset. However, the naysayers continue to remain skeptical of Bitcoin and digital assets. They still believe that the lack of any underlying asset makes Bitcoin a lottery investment vehicle at best and a Ponzi scheme at worst. Business Bureau, WION World is One. Now, for more on this, we are now being joined by Sharad Chandra, who is the founder of Empowered Ventures. He's joining us live from Bengaluru, India. Welcome to the broadcast.
Thank you. Good morning. Thanks for having me.
All right. So I want to begin by asking you, what is your take on the rising bets in favor of spot crypto funds globally?
Right. So if you look at the developments which happened in January this year when the US SEC, they approved Bitcoin ETF, and this led to a flurry of investments in the space because there were incumbent institutions sitting on the fence and watching how this space will play out. And with the SEC approval, all the incumbent investment funds have started moving in. And historically, if you look at the last 7 years, Bitcoin has outperformed S&P and every other asset class. In this year, Bitcoin has outperformed S&P by almost like 3 times. So what's happening is people are looking at Bitcoin as an emerging asset class and looking to diversify their portfolio so that they can generate returns for their clients. And given the way the macroeconomic situation is folding out, this new emerging asset class happens to be one of the places where institutions and funds can put their bet on.
Right. Now, we just know that it just made its debut in Australia. So catering to that, how do you see the approval of Bitcoin's ETFs beyond US shores?
Right. So what's happening is, excluding US, geographies like, let's say, APAC, where Hong Kong is leading from the front, where there's more regulatory clarity, and other jurisdictions like Australia, they are following up, where there's more certainty in terms of regulations. Institutions in those spaces are coming up with new funds. So, for example, let's say Hong Kong, even Ether spot ETF was announced. Right? So we'll see more and more action. And given the way the G7 meeting which happened last week, even all the G7 leaders reaffirmed their commitment towards creating global crypto regulation. So once we have more regulatory clarity, more such structured products will come up in more regions beyond US.
All right. Now, just before I let you go, now, with large asset management firms dividing into Bitcoin funds, do you see crypto adoption widening?
Definitely. In fact, what's happening is the next evolution in crypto markets or even capital markets is going to be an era of tokenization of all financial assets. In fact, Larry Fink, the BlackRock CEO, he said that the next generation of evolution will be on the tokenization side, where every asset, be it financial or non-financial, can be tokenized. Let me give you one example where Citibank it has tokenized private equity fund on Avalanche, the public blockchain. So more and more such developments will happen, and hopefully even in India, because the RBI governor has mentioned that the next step and then the next stage of development with respect to CBDC is also looking at how they can tokenize bonds and securities. So I'm very bullish on the tokenization piece and hopes that more and more institutions and regulators will start adopting this.
Right. Thank you so much, Sharath. We will be looking at more developments in this area. Thank you for sharing your insights.
Thanks.